Hey, what's up, money mavens, dream chasers, and future millionaires? Welcome back to the channel. Let's take a little trip down memory lane. Think about the last time you dropped $20 without even a flicker of hesitation. Maybe it was that overpriced latte with extra foam you grabbed on your way to work, a quick takeout lunch because cooking felt like too much effort, or that random gadget you snagged off the shelf just because it looked cool in the moment. Did it feel like a big deal? Nah, probably not. It's just $20, right? It vanishes faster than you can say, "Where'd my wallet go?" And you move on with your day. But here's the mind-blowing twist. What if I told you that same $20, that little chunk of change you barely notice, could be the seed for a financial empire? I'm talking over $6,000 in monthly dividend income, enough to pay your rent, cover your groceries, fund vacation, and still have cash left over, all starting with just $20 a week. Sounds like something out of a fantasy novel, doesn't it? Well, buckle up, because in today's video, I'm laying it all out for you and our pal John. I'll show you how to handpick the perfect stocks to hit this target, break down the strategy step by step like we're building a Lego masterpiece, and stick with me to the end. Reveal how this portfolio transforms that $20 weekly habit into a $500,000 juggernaut pumping out over $6,000 a month in pure passive income. This isn't smoke and mirrors, it's cold, hard math paired with a sprinkle of patience. Ready to turn your coffee money into a cash flow machine? Let's roll. Before we dive into the juicy details, let's get our bearings. What are dividends, and why should you care? If you're new to the investing game, don't worry. I'm breaking it down like we're chatting over a burger and fries. Dividends are a company's way of saying, "Thanks for believing in us." A slice of their profits handed out to shareholders, typically every 3 months. It's how they share the love with the folks who've bought their stock. Picture this. You own shares in a company that's killing it, maybe they're selling soda or building houses, and they decide to pay a $1 dividend per share. If you've got 100 shares, bam, $100 lands in your account. The best part? You don't have to sell a single share to pocket that cash. It's yours just for holding on. It's like owning a rental property that pays you rent, except it's your investment doing the heavy lifting. Over time, as companies boost their dividends like a worker getting a raise, or you reinvest that cash to snag more shares, that income snowballs. It might start as a trickle, but give it a decade or two, and it's a roaring river. Dividends are the backbone of passive income. Money that flows in while you're binge watching your favorite series or napping on the couch. But here's the kicker. Not all dividends are winners. Some companies, think blue chip legends like Coca-Cola or Procter & Gamble, have been hiking payouts for decades. Others, they're flaky, cutting dividends or skipping them entirely when profits dip. For our $6,000 monthly goal, $72,000 yearly, we need the rock stars, steady, reliable, growing dividend payers that won't leave us hanging. Now let's talk game plan. Turning $20 a week into $6,000 a month isn't about luck. It's about strategy. When it comes to dividends, you've got two main roads, non-drip and drip investing. Non-drip is the chill route. Your dividends hit your account in cash, and you're free to spend, save, or splurge however you like. Imagine you drop $1,000 into a stock with a 5% yield. Pretty standard stuff. Year 1, you pocket $50, $4.17 a month. Year 2, another $50. Year 3, same $50, $150 total over 3 years. Your investment stays at $1,000 unless the stock price climbs or you toss in more cash. It's like planting a tree that drops the same handful of apples every season. No growth, no compounding, just a steady little payout. You got $1,150 after 3 years, $1,000 principal, $150 cash. But that's it unless you reinvest manually. It's simple, it's flexible, but it's slow as molasses for big goals like ours. Now flip the script to DRIP, dividend reinvestment plans, the secret weapon that makes this $20 a week dream soar. With DRIP, those dividends don't land in your wallet. They're instantly plowed back into buying more shares. Same $1,000, 5% yield. Year 1, $50 buys 0.5 shares at $100 each. Now you've got 10.5 shares. Year 2, 5% of $1,050 is $52.50, 0.525 shares, totaling 11.025 shares. Year 3, 5% of $1,102.50 is $55.13, 0.551 shares, hitting 11.576 shares. Non-drip, $1,150, $1,000 plus $150 cash. Drip, $1,157.60, all in stock value. After 3 years, it's a tiny edge, $7.60, but stretch it to 30 years, and DRIP's compounding is a freight train. More shares mean more dividends, which by more shares, it's a self-feeding loop. For $20 a week, DRIP's our turbocharger. So, how do we pick the stocks to fuel this rocket? It's not about chasing the shiniest names. It's about building a portfolio that's bulletproof and profitable. First, dividend yield. How much cash you get per dollar invested. A 10% yield sounds hot, but if a company's shaky, it's a house of cards. Think unsustainable payouts that crash. We want 2-5%, juicy yet safe. Second, dividend growth rate. How fast those payouts climb. A 10% plus growth rate doubles your income every 7 to 8 years. Crucial for hitting $6,000 monthly. Third, company stability. We're after battle-tested firms with decades of profits. Think giants that shrug off recessions, not startups betting on the next big thing. Consumer staples, food, toothpaste, and utilities, power, water are gold mines here. People need them, rain or shine. Fourth, diversification. Don't pile everything into one sector. Mix real estate, retail, tech. If tech tanks, groceries can save the day. Last, growth potential. Stocks that pay now and grow later, like a fruit tree that drops apples while stretching taller. With this blueprint, I've cherry-picked 5 champs: CubeSmart Cube, Schwab US Dividend Equity ETF SCHD, Kroger KR, Lowe's Low, and NetEase NTS. Let's unpack each one like we're opening a treasure chest. First, CubeSmart, ticker Cube, a real estate investment trust, REIT, in self-storage. Picture rows of storage units. People rent them for moves, decluttering, whatever. It's a cash cow, even in downturns. Folks always need space. Yield? For 0.89%, $489 yearly on $10,000, way above the S&P 500's 2%. Dividend growth? 14.06% over 10 years. Payouts soaring like a kite in a windstorm. Share price growth? 5.87% annually. Steady appreciation. Next, SCHD, Schwab US Dividend Equity ETF. This isn't one stock. It's a basket of US dividend kings across healthcare, consumer goods, energy. Think AbbVie, Coca-Cola, Chevron. Yields 3.53%, $353 on $10,000, lower than Cube. But you're buying diversification and safety. Growth rate? 11.04%, 13 straight years of hikes. Appreciation? 6.23%, a reliable climber. Third, Kroger, ticker KR, the grocery giant behind Ralph's, Fred Meyer. Yields 2%, $200 on $10,000, but its 13.58% growth rate is fire. Appreciation? For 0.8%, stable as food on the table. Fourth, Lowe's, ticker Low, home improvement titan. Yields 1.87%, $187 on $10,000, but a 17.99% growth rate is a beast, highest here. Appreciation? 12.72%, riding the housing wave. Last, NetEase, ticker NTS, Chinese gaming powerhouse. Yields 2.57%, $257 on $10,000. Growth rate 17.29%. Appreciation 17.78%. Tech with a dividend twist. Portfolio stats. Yields 4.89 plus 3.53 plus 2 plus 1.87 plus 2.57. Divided by 5 equals 2.97%. Growth rates 14.06 plus 11.04 plus 13.58 plus 17.99 plus 17.29. Divided by 5 equals 14.79%. Appreciation 5.87 plus 6.23 plus 4.8 plus 12.72 plus 17.78. divided by 5 equals 9.48%. Now, $20 weekly, $1,040 yearly. Year 1, $1,138, $31 dividends, $67 growth. Year 5, $6,732, $200 dividends, $5,492 growth. Year 10, $19,697, $585 dividends, $18,072 growth. Year 20, $88,242, $620 dividends, $218 monthly, $77,182 growth. Year 30, $676,842, $76, $621 dividends, $6,385 monthly, $599,221 growth. Total value added, $675,642, $317, $736 dividends, $357,906 appreciation. From $20 a week, $31, $200 over 30 years, to $6,385 monthly. Drip and Smart Picks make it happen. Want $20,000 monthly from the same $20? Click the video on screen. Love this? Smash that like, share your top pick below, and let's keep building that cash flow empire together.